Hey y'all, it's your girl Raquel May Davis. So excited that you guys are here. I'm waiting for the I'm waiting for the gram to catch up with us. All right. So I'm so glad that everyone is here today. As y'all know, if y'all are following my page, I am your girl Raquel May David, a part of the Wealth Insight. Ooh, my mic is here. My Wealth Insight team. And I wanted to come on really quickly to discuss three hot topics, okay, that I want to talk about, and it's really hit me. Hey lady Casey, welcome. Hey Mahama, welcome. If you guys can hear me okay, drop a one in the chat so I know you guys can hear me. I want to make sure that I'm speaking to the people that can hear me, honey. Okay, so if I need to adjust my mic sounds nice, I can do that. Definitely appreciate everyone being here. We're on a couple of platforms, so definitely zipping into doing it. And I wanted to go on and come on and talk about three topics. So if you guys are not aware, it's going to be really quick. I promise I'm not going to take a bunch of time, but I wanted to go ahead and dive into something that I personally have come across that is important to my family, and I'm quite sure to multiple families that has experienced a shift. And I wanted to talk about insurance, credit, and savings. Okay. So, you know me, I'm going to jump in. We're going to talk about tools. We're going to talk about what kind of like how we should be looking at these numbers. And for those of you guys that are on my social media platforms that are insurance adjusters, sorry, are insurance agents. So if you write insurance policies, okay, I'm not telling anyone who to go with. I'm going to tell you what me and my family discussed, and y'all can then pivot and do what you think is best for your family. But I'm going to talk to you guys based on the reality of how my husband and I had this conversation. Um, and one of the things that I think is important that we are missing when we're talking about insurance, credit, and savings. Okay. So the first thing that I came across and I want to go ahead and touch on is one of my friends, or someone I knew, he had lost his partner. And while his partner was alive, his partner was worth $8 million, right? When his partner passed away, however, they did have insurance and things of that nature. But unfortunately, the reality of the situation is the potential of what you have the capacity to make prior to with you being here versus what's going to be missing when you're gone is a real big thing that I feel we as people do not pay attention to, right? It's a very hard conversation to have about what to do when that time comes or how we're going to pivot when the end is here. And it was a real conversation that I had to have with my kids. For y'all that don't know, my mom passed away when she was 45. My grandmother passed away when she was in her 50s. So for me, it was a very big thing, and it's a real thing for those that are like close to me. Y'all know I'm about to be 45 next year. So this is my 44th birthday, my 45th birthday. I'm having an all out situation. Okay. But I wanted to let me set my phone on do not disturb because you know these things be coming on. Okay, these things be coming on. Hold on, y'all. I wanted to have a real conversation with my family because I have raised my kids with the fact of like, I want you to be completely prepared and available in the event something happens when I'm not here. And I did not know, my husband, my wonderful forever husband, he doesn't want to have the conversation. My kids don't want to have the conversation. But the reality is if something does happen to me, especially with the fact that I do have a business, I do work a 9 to 5, I am constantly moving and getting into different spaces. What's going to happen if I'm not here? Like I ran the numbers as to what my company made last year, and y'all, if I pass away tomorrow, my insurance could not even cover what we've been able to successfully do, right? So just thinking about that in totality and how my family has to be able to pivot, I wanted to go ahead and have this real conversation with you guys about making sure that you have enough insurance. I do know I have a couple of people on my platform that do insurance. Shout out to my girl Rachel. I hope she's watching this so she can tag her information. Shout out to my friend La Forenzo. He's amazing in this space as well. I have another friend named Narissa. if she's watching, she can go ahead and tag. I'm not telling you who to go to. I'm gonna tell you that the people that I follow, they know what they're doing and they dipping and doing in these streets. Okay. But I want to go ahead and tell you one of the discussions that I had with my husband. And I saw this on social media months ago. It came back up in my news feed. And I was like, yeah, babe, we need to have this real conversation. So I'm bringing the real conversation that I had with my wonderful other half to y'all so that y'all can then position it and have this real conversation with, your family members so that you can make sure that you have enough coverage. Because what I realized in looking at this, we did not have enough coverage to make sure that we could dip and do if either something happened to my partner or if something happens to myself. Now, again, my husband has assets, right? He has things that he came into the relationship with separate and apart from me. I have things that I came into the relationship separate and apart from him. And now we are one big cluster. Now, how do we make sure that we maintain that for our children that I came into the relationship with, plus the child that we had together, right? So this information that I saw online really, really hit me. And I was like, dang, this is so dope. Let me come and share it with everyone. And one of the things that they were talking about was the die method when you are looking at your estimating as to what coverage you should be able to afford. Okay. Shout out to D Helen, who is in the room. I like, listen, if I see y'all, y'all got to drop a comment on here. Okay. So I can know that y'all are in the room. And definitely share this with your people. Y'all know my Tuesdays, I like to come on and dip and do. So here you go. So I wanted to talk about the die method, and I heard about the die method previously. And as I was going through the actual die method, one of the biggest things that I think that people miss when we're talking about life insurance is making sure that we have enough to cover all these things. So the young lady who I saw, she broke it down in the die method. So D is for debt and death. So how much is it going to cost, or death and passing, sorry. How much is it going to cost for the funeral services, right? And then how much are your debts going to come up to? You want to have a clear idea of what your debts are. I'm in the credit space. I'm always telling people time and time and time and time again, like, hey, go ahead and make sure that you know how much debt you have. Make sure you know where you stand. Make sure this, make sure that. But the reality of the situation is this information is necessary when you're looking to secure how much life insurance you want to have and lock in. Okay. So knowing how much debt you have so that if something happens to you, your partner, your family does not have to sit here and spend the time trying to figure out, hey, do we have enough money to cover this without us being in a situation? Y'all need to look at student loans. We need to look at the auto loans. Like whatever it is that you have outstanding that you are paying on a month-to-month basis, baby girl, baby boy, I need you to make sure that you are adding that number up. So how much do you want your partner to spend on your burial information? For me, I told my husband, you can go ahead and burn me up. Just go ahead, put me, I'm good. Okay. He said he not playing them games. My kids said no. All right. But I'm like, hey, $700. Okay. However, when we had to lay my father to rest, okay, when we had to lay my father to rest, I want to say again, he was in Jamaica, the currency exchange, I want to say it translated to about 3,000 to 4,000, maybe. Hey, Train Bean, welcome to the room, boo. It cost about 3 to 4. My niece just screamed out, Train Bean. It cost about 3,000 to 4,000 US currency to lay my father to rest, right? I think when my mom passed, it was probably about 15. So for me, you have to think about inflation. You have to think about the life changing. So the baseline number that I put for myself and my husband was 20K, right? Then we sat down and looked at our today debts. What do we have today? He and I already talked about things that we were going to implement for 2025, different things that we wanted to already pay off that's in motion. But we sat down and looked at the hard numbers, right? So look at that outstanding debt, add those two numbers together. Okay. Next thing is income. All right. Income is definitely something that we do not think about. And I'm going to be honest with you. Previously, when I was looking at, you better not miss us tonight at 5 o'clock, Chad. Okay. Things that I was looking at when I was thinking about my income is I was like, okay, well, at my 9 to 5, I want to say I make like, let's just use numbers. Let's say if you're 9 to 5, you make 80K a year, right? But you're expected to live, let's say 10 to 20 years. You have to take that 80 times it by 20. Are you making sure that the amount that you're having to cover is going to replace the fact that you are not going to be there? Like, that's just a real conversation. So we're looking at death and debt. We're looking at income. And then the third thing that you want to pay attention to is mortgage. Okay, that's what the M is for, because we're going in the die method, right? M is for mortgage. Okay, if you have a property, what's that mortgage going to be? What is the balance of that mortgage? Both my husband and I, when we looked at our numbers, we included, again, we don't have a mortgage right now. I like to keep it a buck because I think a lot of people don't be telling the truth. I personally do not have a mortgage. I'm currently renting. We do have property. We do not live in the property. The property is in another state, right? But we are looking to build. So like, ideally, if we were to build, are we going to pay cash? Are we going to have a mortgage, right? A lot of the things that we have right now, outside of the car, we don't really have that we have to pay. However, since I do pay rent, I'm looking at, okay, well, if I took my rent times it by this amount, this is the type of house that I want. I know how much my house is that I want to have. I know the goals that we're working towards. But if you do not have a house yet, how much house do you want to get? Are you looking at the $100,000 range? Are you looking at the $200,000 range? Are you looking at the $300,000 range? You want to go ahead and put that number in there. The last thing is E, as in echo, right? It actually stands for education. Why is that important? I'm a mom. Okay, everyone's different. You might be looking at the education for your spouse. So for transparency, my husband has a master's degree. Okay, I have an associate's. I'm joking. I have a bachelor's. I just completed my master's and I'm actually in the process of getting my doctorate. Okay, so but he currently has his master's. Okay, he cute, he yummy, and he got his master's. Okay, but let's say he wanted to go back to school to get his PhD. Are we thinking about that? For me, again, if you were single, maybe you're thinking about education for yourself. For me, I don't want to go back to school no more. Okay. I'm almost done with this daggone doctorate and I want to throw it at somebody. I want to tussle. Okay. But if I do have children, right? We have a little Hunter. Y'all that know me and follow me know that I have a wonderful 7-year-old, which means he's going to have to go to school. What is it going to cost if he decides to go to a public college versus what it's going to cost us if he decides to go to a private college? Those numbers have to match. So on the low end, when we did the calculations of our lifestyle for us to make sure that, because again, I'm so sorry, let me back up, y'all. As far as children go, my oldest is 21. He's already graduated. Well, he's 20. He's going to be 21 this year. He already graduated from college. My second son is alleging he does not want to go to college. But again, when we did the calculations, we added my second son, we added my daughter, and we added the baby. So we have 3 children that could, in essence, go off to college. I have to make sure that I'm preparing them for that opportunity, right? So if we're looking at that holistically, when I did the numbers for my husband, on a bare minimum for me to cover my lifestyle as it stands, we need 2 mil worth of coverage. Vehicle, properties, education, lost income, right? Just on the strength of, and my husband's a teacher, so just on the strength alone, when we're doing the math on what the coverage is supposed to look like, we are not checking all of those options. And I really want to be clear that this is about life insurance, but it's also about auto insurance. I work at, y'all know that, y'all people that know me know that I am an injury adjuster, and I sit and I help people day to day that have gone through accidents and been impacted. And the number one thing that I've noticed is that we don't have enough coverage, right? We're going out and we're getting the bare minimum to make sure that we can pay this monthly payment. And then when an accident happened, we are stuck like Chuck. Okay. And I want us to shift that narrative. I want us to stop having that experience. And the only way for that to happen is for us to seriously look at what it is that we are truly worth. If you get into an accident today, what are you worth? to your family, not just the entity of what you drive in. If the car that you're driving is $30,000 and you live in a neighborhood that has vehicles that are over 80,000, like on my block, I want to be honest, like on my block, I'm in a mid neighborhood, right? So I have a couple of Teslas, not a lot. I have like 2 Range Rovers, but I have a lot of Toyotas. I have some old school Lexuses, some old school BMWs, right? But a lot of the people that live on my block, to be quite honest, I know that there's either self-employed or they work for high-end companies, right? So they're driving company cars, and then their vehicles might be in the driveway. Also, y'all, stop leaving your daggone cars outside, okay? Your garage is your car apartment, okay? Just like your house is your apartment, okay? Um, but I wanted to go ahead and come on really quickly and say, if you use the die method, when I learned it, it was amazing. It was impeccable. I will go ahead and find the video and drop it in all of the links so you guys can go and look at it. Because when I say it touched my whole entire soul to let me have this real conversation with my husband about like, what if something happens to you? What if something happens to me? And I took it even deeper and had the conversation about my children, right? Because I do have 2 sets, right? I have the older sets and then I have my little one. If something were to happen to my older set, are we making sure that they are covered the way that they need to in order to make the movement? I want us to be very intentional about making sure that that is something that we're looking at in 2025. Is not just we're a new year, new me, but actionable, actually putting it into play to make sure that we're making the necessary adjustments that we need. So one of the conversations I had with my oldest son, he wants a Tesla. He currently has like a Chevy Malibu, right? That was his dream car at the time. He now works for Tesla. He wants a Tesla. Now we're talking about when you get the Tesla, what does that insurance look like? Because let's be clear, the insurance is going to be different. You drive like a wild boy. So now we're going to look at the coverages for your car. And we're going to look at the coverages for you as a person, because son, if something were to happen to you while you were outside, these are the expenses we still have to cover. These are the outstanding debts. And thankfully, you know, he maintains his credit cards and stuff like that. But these are the things that we have to make sure that you are listening and paying attention to and have covered, right? If something happens. So I want us to be very, very intentional when we are talking about how we are going to show up in 2025. How are we going to put those things in motion? So again, to all of the people that follow me that are an life insurance or auto insurance agent, please go ahead and drop your contact information in the chat. I want people that are on my platform to be able to know to connect with you so that they can make sure that their house is covered in the event something happens. Because the reality of the situation is, the everyday person, you having 2 million coverage is really not, it's not a bad thing. And realistically, this is something that I saw many years ago. I heard Candy Burris, she was on a show and she said, one of the things that me and my friends do is that we are all beneficiaries on our account. This is when she was single. We're all beneficiaries on our insurance. If something happens to us, we already know what we want to do. And then this person can get the equity, because I've noticed that that's how other communities have been able to build wealth, is by having these insurance options, right? So guys, don't sleep on the opportunity of what you are able to go ahead and pivot and do, because I'm telling you, it will change your life when you are realizing what debt-free looks like and not getting in a worse situation. All too often we lose family members, we lose loved ones, and when we lose them, we're like all heartbroken. We don't know what to do. But the reality of the situation is we didn't have the conversations that are necessary. So the dime method: debt and death, income, mortgage, education. Add those things up, make sure you're covered. When it comes to the vehicle, I still want you to use the same premise. Instead of it being mortgage, you can change it to V and make it the dive method. Change it to V as in Victor. And what is the vehicle cost? Because the reality of the situation is most people do not have the proper insurances. They don't have gap coverages and things of those natures to help you when you are experiencing a hiccup. Okay. So that is what I wanted to go ahead and drop like it's hot for y'all. Um, we have just to go ahead and transition. One of the digital products that we went ahead and launched, because my homegirl Kyra Dodd, okay, she got online and she was talking about digital products, and I have a bunch of digital products, and I have not been pushing them like to get this work. You know what I'm saying? I'm joking, but I realized that I had these options, and it's now 2025, and I'm not making sure that you guys have the tools, whether you guys can work with me directly or want to do it on your own. I want to make sure that you have the ability to go ahead and do so. So one of the things that we created was the Life After Divorce Journal. For everyone that knows, that was something that helped me after my divorce get myself back on track financially. So I went ahead and created a full journal with the affirmations, with all of the tools that I use to get myself from a 543 after my divorce up to a 746 in a matter of 9 months is how long it took for me to do. So I put the journal together. The journal is $15. The link is actually in the description. And if you guys want the journal, comment journal, I will go ahead and send you guys the link directly, because I truly, 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 if you guys are watching on YouTube, the link is in the description. You guys can click on it, purchase it, and be able to actually come up with a game plan as to how are you going to get your money from acting funny in real time. Like, I want us to be intentional and put the action behind it. In the journal, I also drop a lot of tools and links that are going to help you, because I think a lot of times we jump onto YouTube University but don't necessarily know what things we should apply for our profile. The journal will help you with that, okay? So and it also gives you some cool coupon codes for you guys to implement a lot of the tools, and of course if you guys need to book anything with me. So I wanted to go ahead and come on here and just touch those two topics. The third topic was savings. In the journal, we have a savings roadmap, okay? I want us to be clear on what we're saving for. One of the things when I worked at PNC Bank, shout out to PNC, one of the things that I loved about PNC is they had what's known as a virtual account. The virtual account gave you, or virtual wallet gave you, three accounts: a primary check-in, a short-term savings, and a long-term savings. I think that account, to me, holistically gave people what they needed in order to hit the ground running. But you need to learn how to use the tool, okay? One of the biggest things that I've seen, hey lady, is that Denise? Hey, Denise. One of the things that I've noticed is that we have the tools, but we don't necessarily leverage it. Okay. So I want to talk about your checking. Your checking is how you maneuver, where the money is going to go. I personally am a person that say only leave in your checking what you need to pay the immediate bills for that time. I always keep my money either in the short-term savings, or if you have the long-term savings, you put it there, right? One of the things that I think we don't do is talk about celebrating accomplishments. The short-term savings that PNC offers you, one of the greatest things that you can do is anytime you hit a certain number, I don't care if that win is to settle a debt, I don't care if that win is you lost some weight, I don't care. And I'm going to tell y'all, one of the tools that I dropped last year was that I put a bunch of things in my Amazon cart. I do not always purchase them in 30 days, because the only things that I purchase on a regular basis is for my business. I will leave things in my Amazon cart, and at the end of the 30 days, I'll look to see which items I really want to buy. I buy those, and the difference from what I would have spent, I move into my savings. I have a short-term savings, and my short-term savings is every time I hit $500 in that particular account, I do something with it. I don't care if it's to pay off a debt. I don't care if it's to pay down my car, but you have to be able to create a plan. Hey, Brianna girl, you have to be able to create a plan that's going to help you get to the end goal that you're looking for, right? So just like we broke down the life insurance and the car insurance that we need to focus on, I want us to be very clear on making sure that we're breaking down the items that we need when it comes to our savings goals. The short-term savings is what you should use if you're looking to pay off debt. Have a number. When you get to that number, if you're doing credit repair for yourself and you're going to do a pay per delete option, or you're going to do a settlement call, when it gets to this specific number, then you dive in and you go ahead and you you take that money once it gets to $200, or when it gets to $500, when it gets to $600, and then you go pay that item that you're looking to pay, or try to settle that item that you're looking to stay, as long as you have the validation that that debt needs to be paid. Okay. But I want us to be very intentional about how we're moving and what we're committing to make sure that we can actually hit the goals. Okay. So for all of you guys that were watching, DIME method: death, debt, income, mortgage, education. Dive is death, debt, income, vehicle, right? Education, or it can be expenses, right? Completely up to you guys. But you want to have a clear plan of what you are worth, because I promise you, what you are able to make, time is something you can charge for. Okay. When you have a 9 to 5, you are committing that you will work X amount of hours for this amount of money. Right? Once you are no longer here, that money is gone. And all of the extra things that you were doing, like me, I have my TV show, I have my credit company, I have my coaching company, right? I have other legs under me that if I pass away, I'm not just worth $100,000 to my husband or my children or my family, right? So I'm being very intentional to make sure that I'm starting off the new year correctly. You guys are going to see the journal. We are going to be walking through the journal together to make sure that everyone who purchased the journal, and shout out to all of those that actually purchased the journal and are in the group, we are going to be making sure that we're taking posts from the full 31 days of getting your credit together. It is actually going live tonight, so you guys will be getting all that content there. I really, really am humbled and appreciate everyone that has been a part of my journey and my success, right? And all my lessons, because trust me, 2024, I learned a lot of them. Okay. But I do want to make sure that we are being very intentional about what's going on. What you can definitely keep an eye out for is going forward, I am going to be doing a nice after call wrap up for the people who have been on my TV show. We're going to definitely dive into that experience, really get their feedback to go through. And other than that, I want to say, love y'all for real. I appreciate y'all dopeness, and be intentional. Go ahead and not just make the plan, but work the plan and be dope on purpose. Love y'all. Bye. Sorry.